Good morning, traders. Welcome to Thursday of this beautiful week. Make sure to swing over to ssftg.com/brief to grab your morning brief levels. Before we jump on in, we always need to check what news is going on and when so that we're not stuck on the wrong side of it. Never a fun situation to be in. So looking at the news calendar for today, we do have some news announcements a bit earlier. 8:30 initial jobless claims. Those are forecasted at 800,000. Previous was 787,000. We also have the 10 o'clock ISM non-manufacturing PMI for December, forecasted at 54.6. Previous was 55.9. Outside of that, just some medium news announcements with FOMC member Bullard speaking at 12 o'clock and 10-year note auctions at 13:01. So not a ton else, but the news that is coming out today is definitely big. So a lot of eyes are going to be on the markets, and with the amount of volatility that we've been getting lately, that could definitely cause some interesting things. So let's jump in for today. Today's date being 1/7 of 2021. First off, taking a look at the NASDAQ with some pretty good continuation to the downside, but one big obvious scenario here is this broken L1 that just completely shattered the lows on pretty big divergence too. So across these lows, there's a very, very obvious MACD divergence. And along with that, sellers tried maintaining selling pressure, and they got it a little bit, and then it just completely shut it down. When it broke higher above that sell zone, you can see sellers started jumping ship and bought it back up. But that led into a retest back into the top of the wedge. Sellers are obviously still interested in the top of the wedge. There's a good amount of resistance coming in from the top, pushing the market back again. So after that break back, what ended up happening, the earlier sellers who were stuck, maybe, from the looks of it, given hindsight, weren't able to get out of their entire positions. And when it came back, they utilized that as a chance to get out of the rest. So if the buyers are going to take this higher, this is their opportunity to try to take it higher. But at the moment, we're not going up or down. We're not breaking new highs. We're not breaking new lows. There's nothing going on at the moment. It's just stuck in the middle. So at the moment, there's still really good support at 12,610.75 and potential resistance back up to the highs above some of these previous swings into the 800s, just mainly with sellers trying to position themselves with a low risk, high reward scenario with entries, above those highs or in those highs with stops above the top, but the reward is, one of those catastrophic failure moves all the way down and end up being 5 or 6, 7, 8 to 1. So sellers are definitely interested. It's just, if it starts breaking higher, they might not be interested for a while. They're going to be looking for better prices. And the bulls, they still haven't broken above the wedge. We're just kind of stuck yet. So better prices on the lows or a break above the highs, but where it is now, it's a little bit tough. Next up on the S&P, we've got kind of a similar situation, but the S&P isn't really making very strong highs, and that's to be expected. We had a failed flip off of the lows, and the failed flip popping to a new high. I mean, realistically, that's barely a new high. That's not really a whole lot of proof, when you're looking for a new high, and a new high that's got some backbone to it, you got to get a little more than that. That's a little tough. So when it started pulling back, it's no wonder that this L1 held so just badly. It's just really gross in there because, well, did it make a new high? I mean, technically, it's a little bit sloppy, and buyers responded in kind. It's sloppy. So as it starts making its way back up, it's more likely that all of those buyers who've been kind of stuck in this gross, sloppy area are going to start jumping ship above these previous swing highs. And right now, that's creating enough pressure for a lower high and some pretty good bearish movement back down. If sellers start pushing back lower again, now we've got a really nasty trap on the top and potential for the market to flush all the way back down. This is all open space. Right? There's not really a whole lot inside of here to hold the market up. It just kind of left it in the dust. So we'll have to wait and see. But for right now, the S&P is not looking so great. Then over on gold, which unbelievably still has the open gap. It didn't fill that gap yesterday. It came just a hair away from it. 1901.7, and it made it down to 2.8. So it missed it by 11 ticks, but that gap is still open from the weekend, and buyers put in a lot of defense. So when sellers tried coming in for a secondary leg down, which, I mean, realistically they would have, trying to fill the objective, it got obliterated. Nobody showed up to the party. So these sellers are now starting to jump ship. And with this weakness on the high, that's showing that the sellers might not have liquidated everything. It seems like as soon as it popped above the highs, they reloaded more. And now we're continuing back to the downside. So this is the shot, right? This is the chance that sellers have to try to break this lower. But if they fail, it's game over, right? There's nothing left. All of the sellers reloaded at the highs, and if it starts cracking above those 30s, well, nobody's going to really want to hold the bag anymore, and that's where we could start seeing it slide all the way back up into the upper 40s, 50s, maybe even pushing into the 55s. Over on crude oil, we've got a nice ascending wedge working its way up. Buyers have so far put in a monstrous amount of defense around, what a shock, the $50 mark. I would have never guessed. It's not like that's a massive psychological level that we've been talking about forever. We've got some nice ascending movement on this, but all along the way, it's diverging. So MACD is saying this is likely still bullish, but in need of a pullback. It's desperate for a pullback. And a lot of times when these markets are looking for a pullback, where are they going to dip to? We've got a spike into a channel above a major psychological level, probably going to pull back to the psychological level. Not to mention that lines up almost perfectly with an L2. It would be the first breach of below the wedge, and that would be the chance for buyers to rip it back up to at least test the base of it. So everything waiting on a dip down back towards the 50s if they can get it. If buyers want to keep pushing this higher, that's fine, but it's getting more and more exhaustive every time they drive it up. Over on the euro, still an open gap over there as well. It hasn't filled the gap on the euro yet. I thought for sure the euro was going to fill that sooner, but, well, the last price action over the past few days definitely said no. Now we've got a major lower high. Even after that sharp V bottom, now we're breaking back lower again. So this is a big rotation. They held a lower high. They held back inside of the wedge, and I don't think many people were planning on that, expecting that to happen. A lot of traders, given that sharp V bottom, will have been looking for this to rally up to a new high fairly easily, and it looked pretty clean until it hit the top of the wedge, and then it didn't work at all. Completely fell apart and now is collapsing. So with this drop lower, sellers are going to be looking for an aggressive way in, knowing that buyers are stuck. They don't want to let the buyers out. Because if the buyers get out, then the squeeze is off the table. If the buyers are still stuck in, then sellers can squeeze this down, and that's where you can get that big move down to fill the gap. It's still bearish, even if it does bounce a little bit further up into the 1.23s, but realistically, it's just not going to have as much oomph. So as long as sellers can keep holding this down, buyers are underwater and they're drowning. And then finally, over on Bitcoin, we've got some good continuation to the upside, really strong bullish channeling, and so far, really good sequencing. MACD is starting to suggest that the market should go a little bit more sideways. It's not necessarily diverging. It's just saying, hey, maybe this has gone up a little bit too far, too fast. A lot of times when you get into this situation here, when the market is saying, or when the indicators are saying there should be a pullback, but the market is not pulling back, that usually means that it's waiting for a squeeze. And we know what happens on squeezes with Bitcoin and the cryptocurrency as a whole, that it's already up to almost 40,000, right? I mean, just a couple days ago, we were talking about buy zones in the 30,000s. Now today it's at 37,000. So this movement up, it's begging for a pullback, and buyers would love a snap down to 35. But realistically, it's not pulling back at all. So if this starts squeezing higher, well, you guessed it, we're probably going to squeeze up to the next logical area, which is going to be around 40,000. And if it starts pushing up into there, that's when it's gas pedal to the floor. We start squeezing, and who knows? the moon is the objective from there. Buyers are looking to buy the dip. It's just a matter of if it's going to give it to them. Alrighty, well, that's going to do it for today. Like we always say, stay safe out there, keep those stops in play, and let those winners run. Until the next time, we'll talk to y'all then. Thanks.